Hi, and welcome to the Market Alert for Friday, the 10th of November 2023. So yesterday, stocks and bonds hit on Powell and dreadful 30-year auction. US stocks and bonds tumbled Thursday after historically bad US 30 auction. It was followed by Powell's hawkish reaffirmations. So, interesting that we're back from dovish to hawkish once more. Stocks tumble, yields surge after catastrophic 30-year auction. Stops with the biggest tail on record as foreign demand craters. That's even more interesting, that foreign demand for US 30-year bonds has cratered during yesterday's auction. And too many bulls, this headline here, equities reversing and bonds bouncing. So interesting. We'll look at that in more detail in a second. Economic news today, we've got GDP month on month from the UK, the prelim quarter as well. We've got Lagarde speaking at 12:30, and then 3 p.m. we've got some more economic news from the US, prelim UOM consumer sentiment and the prelim UOM inflation expectations. So let's crack on, have a look, and let's start off with the implied volatility. Big turnaround in this during yesterday, so let's have a look at that first. So yesterday we can see that we're up at 11.94, a bit of a spike up there. We've gone from the low of 10.99. I mean, talk about cratering. I've never seen this, as I've said before, where the volatility has just fallen out of bed and the market is sitting at this resistance level and down yesterday as well. So for me, the fact that the implied volatility is so low, there's a good chance this market is likely to reverse and move lower. Let's have a look at the Dow. So the implied volatility is based upon the activity of the Dow Jones, and you can see there, we just mentioned, you've got this resistance, market down yesterday below the 200 MA. If it's going to move back up, and it's Friday, there's a potential to do this because they don't like to finish the weekend on a down if they can help it, because they get indigestion over the weekend worrying about the position. So hopefully the market will pull back there, but it'll be interesting to see whether it can take out the 34,146. I mean, we've got some more above this now, of course, this pink line here. So the real sort of resistance, or the second resistance to the upside, because it's failed to close above the 34,146 so far, is that the 34,256 is also a resistance area. Increase in volume yesterday, momentum switching down as well, and the implied volatility having bottomed out at 10.99 at the moment as well. 30-minute chart, we managed to move to the upside to begin with. We then double topped and then we made our way down, and Powell just exacerbated the down move when he spoke. We've already retested yesterday's low and bounced off this by 100 points. So that's a bit of a help as prices bounce there. Depends whether it can hold, of course. In the German DAX, well, we broke through the resistance yesterday in the DAX. We've got this resistance here at 15,269, the market taking this out, but trading up to the 78% retracement there at 15,358 and stopping. So an interesting fib retracement there. However, the market's above the 5 and the 50 at the moment, but there is some selling in the volume and also a bit of divergence in the market as well, because the market's moved higher and the momentum has moved lower there. So again, there's some potential here for the market to move lower, but watch that 50 EMA in the daily chart, because the market likes the 50 EMA. As can be seen yesterday, all of the averages in the right direction there, all pointing to the upside, and the DAX moving up all the way through, taking out the R1 and then moving up to the psychological level there, which has actually become the R1. Nowhere near the low overnight, unlike the Dow, but we are below that 50 EMA and the 20 bar moving average. DP and close also are going to offer resistance, but we haven't filled the gap overnight, so we could get a bit of a bounce up to the DP and then see what happens from there. In the S&P 500, again, resistance, you can see that the market struggling there, and also overnight doing exactly the same as the rest, trying to move back to the upside. You can also see that we've got the 200 and the 50 EMA there as support for this market, but like the rest, starting to round over. Got some divergence as well. Still above the overbought state in the market as well, and that means that if we're still overbought, then the market can still move to the upside there. In the 30-minute chart, sideways until Powell spoke, and that brought the market down. We've retested the low just like we have with the Dow, and now starting to move back up off the 450, I think is that level, isn't it? 4350 is where it is, not 4350. So above the 5 and the 20 bar moving average there as well at the moment. Meanwhile, in the UK, the market's stuck in a sideways range. You've got that resistance there with a 50 EMA. The market also above the 20, and just holding above the 5 there at the moment. No man's land as far as momentum is concerned at the moment, so stuck in that sideways range. 30-minute chart up yesterday, straight up after the bit of grief at the open. Then the market tested, did a double top, and then made its way down overnight, but nowhere near yesterday's low at this time. In the US dollar, this making its way back to the upside, putting pressure on the metals, but still below the 20 bar moving average at the moment. The goal is to get the US dollar back above this level. And finally, in the metals, stuck in a sideways range. I am still bearish on this market and will remain so for any length of period of time until the manipulation stops. You get these where they run the market up and then they bring it back. Okay, we haven't come back to yesterday's low yet, but give it a chance today when we have the opening of the spot price in London. Down in gold as well, we're actually oversold, finding support at the 200 MA with demand and also the 50 EMA there, but struggling with the short term of getting back above the 5 bar moving average, and hence the candle being red there. In the 30-minute chart, we blasted to the upside, but we're taking care of moving it back to the downside. The only thing that's keeping this buoyant is the Middle Eastern conflict, which any easing of that will see the gold price move back to the downside. And finally, gold-silver ratio stuck in a range at the moment, but I've still got my eyes focused on the 90 area up here, because that's where I believe that it is going to go, because they're not going to stop manipulating the price of silver until the financial system collapses. And at the moment they can just keep printing money, because even though they're paying $1 trillion now a year on interest, which I saw yesterday on zero wage, which I meant to capture, I'll see if I can find it, then we can expect more pressure in the metals going forward. Okay, that's it for this one. If there is anything else to report, anything out of the blue, then I'll let you know. But otherwise, have a great weekend. And as ever, thanks for watching. See you in the next one.